So at first glance, TD Bank's latest quarter looks absolutely incredible, a real blockbuster. But, when you start to peel back the layers, you find this wild story. It's a tale of two extremes, really. On one hand, you've got these record-breaking profits, and on the other, a massive, multi-billion-dollar problem that's going to take years to fix. It's a real quarter of contrasts.
So to really get what's going on here, we're going to go straight to the horse's mouth. We're diving into TD's own Q3 2025 earnings report from August 28th. This is our inside look at what's happening at one of the biggest banks in North America. And, with any of these big earnings reports, the first thing you see are those big, flashy headline numbers. And for TD this quarter, wow, they aren't just good, they are absolutely staggering. Get this, $3.9 billion in adjusted net income. I mean, just let that sink in for a second. That's for just one quarter. It's an absolutely incredible number, and it really shows you the kind of raw power their main business has. But, and this is a big but, that is not the whole story. Not even close.
Yeah, because hiding just behind that massive profit figure, there's this really expensive, really complicated problem that the bank is throwing a ton of money and people at to fix. And that right there, that's the real drama in TD's story right now.
All right, so let's break this whole thing down, this quarter of contrasts, and we'll start with the good news, those profit numbers. To really get how huge this is, you've got to look back just 1 year. In the same quarter last year, TD actually lost $181 million. Now, fast forward to this quarter, a profit of $3.3 billion. I mean, that is just a mind-blowing turnaround.
Okay, wait a second. You're probably thinking, hold on, you just said $3.9 billion, but now you're saying $3.3 billion. What's the deal? And that is a great question. It's a super important detail, so let's clear that up right now.
So here's how it works. Banks usually give you two numbers. You have the reported number, that's the official run, but then you have the adjusted number, which honestly is often the more interesting one. It's kind of like the real performance number, because they pull out any one-time costs, things like big restructuring charges. So that $3.9 billion figure we saw first, that's the adjusted one, and it gives us the best look at how the bank's actual day-to-day business is doing.
All right, so we've seen the good. Now for the other side of the coin. Because underneath all those shiny, impressive profit numbers, there is a massive regulatory problem. And it's so big that the bank itself is calling it their #1 priority.
So what's the issue? It all comes down to something called anti-money laundering, or AML for short. Basically, these are all the laws and systems a bank has to have to make sure criminals aren't using their accounts to clean dirty money. It's a huge deal.
And right now, TD is neck-deep in a massive, top-to-bottom overhaul of their AML program in the U.S. Why? Because of what their own reports are calling serious deficiencies. And they're being really upfront about this. This is not going to be a quick fix.
I mean, just take a look at the timeline they've laid out. They're hoping to get their own internal fixes done sometime in 2025. But the full process, with all the testing and the regulators signing off, that's going to stretch all the way through 2026 into 2027, and maybe even longer. This is a marathon for sure, not a sprint.
So you've got this huge, monumental challenge. What do you do? Well, TD is responding with what they're calling a series of decisive actions. And it's basically a complete strategic overhaul of the bank.
Their whole plan is built on 4 main ideas. First, they're cutting costs in a big structural way. Second, they're shaking up leadership all the way up to the board. Third, they're changing how they use their money, their capital. And finally, they're trying to simplify the whole business. It really is a top-to-bottom rethink of everything they do. And a huge piece of this strategy was that big move to sell their stake in Charles Schwab. That one move freed up something like $15 billion in capital. That is a ton of cash, and it gives them all this flexibility, not just to do stuff like buy back their own stock, but crucially, to pay for this super expensive long-term AML fix.
And on top of that, they're really trying to get leaner. They've started a new restructuring program, which does include cutting about 2% of their workforce, and that's expected to save them somewhere between $550 and $650 million a year. It's all part of this bigger push to become a much more focused and efficient operation.
But here's what's so wild about this whole story, and maybe the most important part. While all this messy, expensive, difficult stuff is happening in the background, the bank's actual core businesses, they are absolutely crushing it, firing on all cylinders.
Okay, let's do a quick run-through. Let's start up in Canada.
Their personal and commercial banking business just hit record revenue, record earnings, and record numbers for both deposits and loans. An absolute powerhouse.
Then we go down to the US, and even though this is where the AML problems are, their retail wealth business is just growing like crazy. Wealth assets are up 12% from last year, and get this, balances for their mass affluent clients shot up an incredible 26%.
And if you look at their whole wealth management and insurance division together, just a phenomenal quarter. Earnings were up a staggering 63% from a year ago. And finally, you've got their investment banking division, Wholesale Banking. For the third quarter in a row, they brought in over $2 billion in revenue. That's the kind of consistent, high-level performance you love to see. So when you pull it all together, what's the big picture here? Well, what we're looking at is a bank that's right in the middle of a massive, profound transformation.
And we won't have to wait long to see what's next. The bank has already announced they're holding a big investor day on September 29th. That's when they're going to lay out their new revised strategy and their new financial goals for everybody. So yeah, you're going to want to mark that on your calendar.
And that leaves us with a big question, right? TD is clearly making some huge moves. They're restructuring the business, they're tackling this massive regulatory issue head-on. But will all of these decisive actions be enough? Is this going to create a stronger, simpler TD for the long haul? Well, I guess you could say that's the multi-billion-dollar question.